Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is CPI Live. Today, we're going to cover the latest installation of the United States Consumer Price Index. It's a big deal. It's a real big deal. The reason why is inflation. Inflation is everything. Fed policy in 2026 is going to be one of our key market drivers. Now, of course, we've got wars. We've got politics. We haven't even talked about the midterm elections that are coming up this fall. But right now, what we need to be focused on is Fed policy. And remember, there is an active DOJ investigation into the Fed Chairman Jerome Powell. That's a huge deal. It's something I haven't seen in my lifetime. I'm interested and I'm excited and ready to trade really the fallout from an unprecedented event. Remember, uncertainty, unprecedented events give us an opportunity because they're going to move the markets all over the place. Now, full disclosure, you'll notice that I start smiling every time I see there's a DOJ investigation into Jay Powell. It's not because I enjoy this. It's not because that I want this, but it's because we are going to see some opportunities in trading that we've never seen. And I'm excited. I think that we have as good a chance as anyone to really profit from this news. Remember, the folks on CNBC, the talking heads, whoever you might go to for your financial news, they've never seen this either. So our opinion's just as good as their opinion, and I think that we're better than them, and I think we're better than them for a lot of reasons. So I want to welcome everybody back to the room. I think that we're going to have a fantastic trading session today. We're going to look at a lot of markets. We're going to cover some of the basics here, and then also we're going to do some high-impact scalping, what I call high-impact scalping. That's going to be the 5813 EMA. We're going to do it on the dollar, yen, the Great Britain pound, USD, and gold, and we're going to do it on very compressed time frames. We're going to start with a 5-minute, and then we're going to look at that 1-minute chart. I think we've got an opportunity there to trade this one potentially very well, so I'm excited. Good to see everybody back in the room. A lot of familiar faces out in YouTube land. Yes, sir, always a pleasure. Yes, sir. Let's see, Eyes Hazy, good to see Eyes. Amici, good to see you. Amici, Tina Jing, always pleasure, Tina. Steven, mark it out. Yeah, it's that time again. Yes, it is. Gamer, hello. Reza, hi. Gamer, Euro USD. Yeah, we're going to look at the Euro USD, absolutely. Tuku over there in the How to Trade community. Good to see you, Tuku. Welcome. 512 Eli sounds intense. Nah, it's not intense. It's going to be a lot of fun is what it's going to be. We won't get intense until Friday when it's time to take half of our money home with us. We'll talk about that when the time comes. All right, let's get right out to price action here. Here's your MT5 platform. We've got gold. We've got silver. Now, I keep showing this almost every day because I want everybody to see exactly what's developing in our precious metals markets. The gold-silver ratio, if you missed that video, check it out on over at Switch Markets on YouTube. What we have here is we have gold. Gold is moving higher, but silver's moving higher faster. So that ratio is definitely coming down. Earlier in 2025, it was right around 100. Gold-silver ratio is the price of gold divided by the price of silver. It was around 100. Now it is far less than that. We are seeing really that gap close, and that's one of the big tools institutions use when they decide to get involved in, say, a silver or a gold. Interesting stuff. We're right at all-time highs. Silver, in my view, we covered this in this week's Switch On Hot Picks. I think silver's going to 95 and 100. And does it happen today? I wouldn't be surprised. Nothing will surprise me anymore. When you've been in the markets as long as I have, nothing surprises you after a while. So I'm definitely excited. I can't wait to get it on here with our high-impact scalping. We've got about 7 minutes until the number drops. So let's go ahead and cover what we need to cover first. Remember, if you want to trade any of these ideas or markets that we're talking about, thousands of global markets, zero commission accounts, head on over to Switch Markets. A lot of value there, a lot of new specials for the new year. Definitely the place to be if you're a trader in international locale. So basically everywhere but the United States, you're eligible. Here in the U.S., we're not quite up and running in the United States just yet, but fully regulated. Check out the views on Trustpilot and go ahead and get involved at your leisure. Okay, copy of Scalping. Here we go. I mean, we're getting in there. Trade update. First trade update I want to point out is going to be the U.S. 30. U.S. 30, 50,000 is on my mind going into this CPI release. I don't think we get it on CPI, but we may get it right after CPI. So 50,000 in the U.S. 30 is a big deal. 7,000 in the U.S. 500 is a big deal. You can see we've got compression in front of 7,000. Now, what we did in the hot picks this week is we used a tool that I rarely use. It's not because it's a bad tool. It's just because I don't really find much use for it, but it is a valuable tool and it's very popular. It's called the Fibonacci extensions. Now, thinking about making a video on it if there's enough demand, what Fibonacci extensions do is they give you targets potentially to get in on a move to maybe a given level. So right here, you'll notice that we've got our range, which is sort of January's range thus far this year, compression in front of 7,000. We take that range and we apply our Fibonacci extension sequence, and we've got 7 right up there around 786 would be a target, 72.48. If I was going to highlight anything on this chart, I would highlight that. 72.48. Once 7,000 goes, more than likely we're going to bang higher over the next quarter. I would be surprised if we don't hit 72.48 sometime this trading year. I know that's vague. We're going to know more, but once we break 7,000, it really will just become a function of buying in on retracements, and we'll be here every step of the way. So definitely want to start out with a little bit of a look at equities. Second trade update is going to be U.S. oil. This one, you know what? I didn't really get what I wanted out of this one. We're going to have some performance metrics for you through our first 7 trades of the year, and it's been a very good year thus far. I'm smiling. I'm always smiling, but I'm definitely smiling this year. What we had was basically a sell right in front of 60. That was the basic idea, what I was looking at. 89 sells. Maybe we didn't do a very good job. We could have maybe sold a little more aggressively at 75s and got paid a little bit better. This is a 30-minute chart. Our key level was 60. Still have a bearish read on WTI crude. Oil has rallied over the past several hours, actually the past, 12 hours. New sanctions were placed on Iran trading partners for the violence and the protests. That's probably the first step in U.S. intervention in the region. We'll talk about that on a later stream. But right now, I was looking at 60. Still have a lot of bearish sentiment towards this market. We went right up to 59.99 and sold off immediately within about an hour down to about 59.47. So our entries, we were somewhere right around 59.90, 59.89, somewhere in that zone. So this trade did produce about 42 pips positive action, which in my book is a darn good trade. We were looking for about 75 though, so technically I wound up scratching it. Once the price broke above 60, you got to scratch it. Lots of opportunity to take profit there. Lots of opportunity to move to break even. So taking a loss on this trade, it's not the best thing to do, but if you got caught up in it, I completely understand. It's just one of those trades that we were looking for a little bit more follow through. About another 30 pips would have paid us off, but still a really good move and a nice trade, especially if you were scalping. I mean, if you're looking for 25, maybe 10, 25, 30, 40 pips, you did very well. We were looking for a little bit more. I was looking for 60, maybe to be the absolute top of this market for the intermediate term. If we get some compression and a little bit of confirmation up there, we'll be back in business right from 60. Let's check in on our metals. A real quick look at metals. This was the cup with handle. This is our gold chart, the cup with handle that we pointed out last week. Really a beautiful cup. There's your first high, pullback, second high, compression, break. Beautiful stuff. Bullish. Would love to buy pullbacks down there right around 45, 45-ish, maybe 45.50. We're going to be looking at that during our CPI release, which is coming our way in about 2.5 minutes. All right, silver, same deal. We're looking at 90 to the top side, probably throw 95 into the mix there as well, and then 100. I don't honestly think much of 90. I think that it's going to stand up a little bit, and maybe that's just an educated guess on my part. I love 95 though. 95 and 100, I fully expect to see compression in the silver market right up here. If we don't get some compression, then maybe some of those folks that are calling for $150 and $200 silver, they may be spot on. For me though, I'm looking at 95. That area between 95 and 100, that's going to be a combat zone, and I'm watching that closely. 90 even, I'm not really that excited about. I think we might get a little bit of short-term compression there, but I don't think that sets up to be a top. But then again, I've been wrong before. We'll wait and see exactly what happens there. So definitely wanted to cover gold and silver for you real quick. All right, we do have some fundamentals to cover. Let's see exactly what we got. Let me see. Silver, Euro USD. Yeah, we're going to look at the Euro USD here in just a second. Don't worry. We'll get to it. Gold, yeah, gold. We've already looked at gold. Let me see, Ahmed Shane. I usually do a trade around COMEX. Any advice on how to read direction before COMEX or to wait as a breakout? I'll cover that a little bit later, Ahmed. We've got the number dropping in 2 minutes. What about the NAS 100, Ricochet? We're going to look at the NAS 100 when we scalp, absolutely. Best way to approach the COMEX start? Ahmed, that's a long question. I'll have to answer that one after our number drops. Okay, just to look at our fundamentals, US CPI is the name of the game today. Now remember, a low CPI is bearish for the USD. A high CPI is bullish. Why? Low CPI suggests no inflation. We talk about rate cuts, economic growth, things of that nature. As far as high CPI, that means inflation's rocking and rolling. We're talking about rate hikes, restrictive policy, and pretty much everything you need to bring that money supply back down to where it needs to be. That's what you're looking at. As far as today's projections, we're expecting everything to come in basically in line. We're not looking for any surprises today, and typically that's when you get the surprises. As far as the trends we need to watch, remember, CPI actually stepped back in November after the government shut down. A lot of questions about the validity of these numbers. Take a look at your 10-year chart. This is what I want everybody to understand about CPI. This is the raw CPI data. Raw CPI data, very important not to lose the forest for the trees. Understand what this is. You can see this is an incredible inflation, but it really kicks off in mass in 2020, and that's when you get the big move. Okay, let's get back out to price action. Let's go right over to our Euro USD. Pretty good stuff. We had really a banger of a trade that started off the trading year. As far as a monthly Fibonacci sequence goes, downside support would be absolutely huge at 112.50. We're not going to get that. Let's take this right down to a 4-hour chart. What's happening? Okay, let me see. Inflation rate just reported at 2.7%, came in line with expectations. Core inflation rate year over year 2.6%. Consensus was 2.7. CPI reported at 324.05, previously at 324.12. So we're still coming down on the raw number. And then the United States inflation rate 0.3%. Consensus was 0.3. United States at 0.3. So we came in line with expectations. As far as what we can expect right now out of our short-term price action, there's the big bullish move. Talked a lot about a big bullish move here. This is a dovish number. This is a dovish print. Inflation does seem to be coming down. That's going to raise the odds of those rate cuts, and you're going to have a new Fed chair very, very soon. I think these rate cuts aren't just going to be small. They're going to be aggressive. So right here, we're taking a look at exactly what's happening. Euro USD banging higher. I have no interest in selling this. More than likely, I want to buy this thing. So we're thinking about buying. Can we get a signal anywhere? Great Britain pound USD. Here's your 5813. You'll notice that you do have a potential bid coming online on this 5-minute chart. I would be very careful. Let's take this down to a 1 minute. Let's let things settle down a little bit. Now, remember the rules of our 5813 strategy. When the 5, which is our hot, that's our 5, okay? That's going to be our red moving average. When it crosses over our 8 and price is above both the 5, the 8, and the 13, you're going to be in a buy situation. Now, we also use the relative strength index down here as being a confirmation device. Okay, so the confirmation device is going to tell us when to buy or sell. We're going to want to sell when we're above 70, and we're going to want to buy when we're below 30. So right now we've got a big breakout here on a dovish U.S. dollar. Right now the dollar's hemorrhaging value. You've got a major move really coming our way here. No matter any way you look at it, this is going to be bullish for U.S. equities. This is going to be dovish for the U.S. dollar, potentially a bullish market driver. Great Britain pound USD. What could we do right now to trade it? We don't have anything set up yet on the 5813. I'm looking very, very aggressively at maybe getting in on a Fibonacci. Be careful. Let these markets settle out for a few minutes. You'll notice the volume is huge. Typically, when you get a big candle like this, the market settles back down into this range. Now, is this going to develop into a complete uptrend? Right now, we're definitely in uptrend territory, especially in the Great Britain pound, the Euro USD, things like that. Potentially could move much, much higher. You'll notice that we failed right there at 38%. Interesting type of a dynamic. We need to let these markets simmer for just a minute or two before we get in there with any sort of not aggression, but any sort of confidence. So right now we're moving higher. Okay, fantastic trade then right there off at the 38%. In my view, very, very high risk. We're still watching our 5813s, potentially setting us up for maybe a sell a little bit later on down the line. RSI is in overbought territory. So right now, what we're looking for, if we want to get in on a signal trade on this strategy, we're looking for the hot. The 5 needs to cross over the 8. The price needs to close beneath all 3 moving averages. That's where we sit right now. Let's take a look at gold. Gold, same basic thing. 5-minute chart, really a beautiful breakout. Take a look at that, 46.13. Silver has exploded up to 87.50. I mean, 90 could come into play by the end of the day. That's no kidding. This is a major breakout, nice compression. There's your break. So how do you want to trade gold right now? You got dovish CPI. That is bullish for your U.S. equities and your your commodities. Things like gold, definitely. You'll notice crude oil's catching some bids right now. Commodities up. Risk assets are up. What should we do? Well, if we're serious about being aggressive towards this trading day, which that's sort of the camp that I'm in, you'll notice that right there is your CPI bar, and then you've got sort of this big pullback in here, and now we're getting compressed. So what do we want to do? Well, I mean, for me personally, I would step back to that 5-minute chart. The reason why is it gives us a little bit clearer look at exactly how big this move was. Potentially, a Fibonacci retracement sequence right off of this low and this high is going to give us a potential entry right down around 46.08, maybe 46.9 and a quarter, somewhere in there. So if we were going to place this trade, and I think it's a pretty good one, I just don't know that we're going to get the pullback. You could definitely have a limit order right down around 46, maybe 09 and a quarter, somewhere in that. Remember, these are demo dollars. Don't use my leverage. You've got to stick to 1 to 3% of your own risk capital, your account balance. It'll give you an opportunity potentially to get in there for a little bit of money. Safe. We're talking about safe trades. It's only Tuesday. We've got a big week ahead of us. No reason to bet the ranch right now. Be patient. Okay, now we just moved higher. You can see gold is moving much, much higher here. We're probably looking at a top side target of 46 and a quarter in the near term. In order to trade this type of thing, you just are essentially going to move your top of your Fibonacci retracements up with the new high, and this would put us in somewhere right around 46.10, which I absolutely love. So let's go ahead and do 46.10 evens and go ahead and throw that buy order down. Okay, that one would be in the queue. 46.10, right above that 38% retracement. We still, on this 5.813, are a long ways off of getting a trade, especially on the 5-minute. This would be a market that you would watch probably for the rest of the day. Now, we are pressing higher, higher, and higher. You'll notice 45.15, interesting zone. Right there, you just keep moving your Fibonacci's up, and you adjust your entry point accordingly. I like 46.10 and a quarter. That's not a bad one at all. We just have to get the pullback, and we should be able to get that relatively soon. 46.13, 90-ish is sort of the game that we're playing right now. My take profit would be relatively conservative. I definitely want to be to the long side of this. We could set it up for 12.50. That wouldn't be bad. Maybe 13.50, somewhere right up in here. Pretty good trade. We'll just shoot for an even 300. Now, when we execute this trade, or when I execute this trade, this is demo dollars, remember. So if we're looking for that to be the payoff in the short term, this is a scalp, tight scalp. I want in and I want out. My stop loss, I'm going to go ahead and use a mental stop here. Now, I know that I'm going to have to get out somewhere down around 46.07-ish. We're buying 10, so that's about a $3 risk, $2.50 risk, somewhere in there. We definitely want to be very aware that if this market reverses against us, we are out. We are headed for the door, and we're not messing around. So that would be a trade that I would have on the board right now, looking at gold post-CPI. All right, we've got a lot of questions out there. We got a question about the NASDAQ 100. It's one of my favorites. If we were going to throw it on this scalping process, okay, we're going to have a trade here setting up relatively soon here in the Great Britain Pound USD. Should be a pretty good one. 5.813. We're going to go ahead and stick with that here in a second. If we do get the bar close and the crossover, then we could build that short. As far as the US 100 goes, okay, we're going to be rocking and rolling right here on this gold trade. No question about it. Going to be in it very soon. There was our low. Our low is 410.43. We should already be getting paid. We didn't get filled. This is tough now. We went right to our entry point, and we missed it by 14 cents. Do we want to keep that trade in the queue? For the sake of argument, I'll go ahead and leave it in the queue, but that's frustrating. We just missed our entry there. We should already pretty much be out. We'll see if we get this execution right here. We want to be aggressive with our trade management. Be aggressive. Don't take a big loss on this trade. Yeah, we should have already got paid on that. That's a tough one. Definitely a tough one. We just missed our entry. In situations like this where I just missed my entry and the trade goes up and gets paid really easy, Typically, I pull the trade. As a general rule, I pull it, and now I will pull it. We just missed out. That's unfortunate. Missed out by about, 12 cents on our entry. That was the trade that we wanted. I'm not interested in messing with it again because the next leg may be one down. Don't worry, we got other trades on the board. Great Britain Pound USD. This is setting up nicely. Maybe in the next minute or two, we're going to have an opportunity to take that short. I really like this trade. I think it's going to give us a nice position potentially to get into the market to the sell side. So this should be an interesting trade. Okay, we have a lot of questions here on gold, a buy or a sell. I mean, honestly, the gold scalp right there was beautiful. I would wait now. I really would wait. You want a deeper retracement now. Maybe 46.05 would be a pretty good trade. See, you don't want those the second time through. First time through is what I'm designed to do. That's what I intend to do. Second time through, maybe the bidders are there, maybe they aren't. Right there, 46.05 though, 46.06 back in. Let's go 46.06 and a quarter here and see if we maybe can get a deeper retracement. 46.06 and a quarter. Let's go ahead and put that one down. If we get a shot at 62%, the back end of that Fibonacci golden zone, we could do it. Still 38% holding up nicely. We'll wait and see exactly how this develops. My take profit on this next trade is going to be a little bit different. We'll talk about it if it unfolds. That's frustrating, though. That should have been money in the bank. All right, Great Britain Pound USD starting to rally now. We want to see maybe if we can get this 1 minute sell signal, could put us in a decent position maybe to profit from filling back in this CPI read, which is a fairly dovish one. So we're fighting a trend, no question about it. We could still get in an interesting position, though, with a nice trade. All right, gold trending higher to 46.14. Yeah, that 38% level was money in the bank. We should have just played it, but that's life. You don't ever stress about the trades that you don't take. You stress about the trades you do take. That's all you can control. That right there, though, that's about as good as it gets for a Fibonacci retracement. There you have it. Right here, we've got definitely a trade setting up right here. The crossover is not quite official. Right there, there's your crossover. There's sort of your sell, potentially. This cross, I want to wait until this bar closes, though, to be extra sure of exactly what this is doing and where price is. You'll notice that sometimes these crossovers, if you get a big bar, they sort of unwind. So you want to really wait and make sure that that crossover is developed. It looks to me like it is official. Let's go ahead and sell this market. Okay, so there's the sell. Remember, my leverage is just ultra small. That's not even worth watching, to be honest with you. Let's put a couple zeros on that. Yeah, we'll put it in something like that. Let's close that one. There's your sell, though, coming into play. Let's go ahead, sell it again. I just want a little bit bigger number there to watch. So your entry point, not the best, but still you're on the short side of this market. So the idea here is very simple. Very simple with this is a 1 minute. You'll notice that it's probably going to turn into a day trade. Realistically, stop loss is going to be right up above that area, right up in there, which is going to be somewhere right around 134.96. Your take profit, I'd probably be shooting maybe for the bottom of that CPI range or maybe a reversal. This trade here, a little higher risk, I would say, just because of CPI, but we're in a pretty good position maybe to get a bit of a move towards the bottom of this range. So we're going to go ahead and let that cook for a while. I think we're in a decent position. Although we are sort of fading the intraday trend, I still say you've got a decent chance. Now, is it wise to use a 1 minute chart to day trade? Maybe, maybe not. You know, this is more of you're trying to scalp essentially, but I understand that what we're doing is we're putting our stop loss at the top of that CPI range and sort of betting that the market's going to rotate back down into what we're looking at. You'll notice right there's your signal. There's your crossover, the 5 crosses over the 8. Price is beneath all 3, and you place the trade. Is it high risk? Yeah, it's high risk. Is it a good use of your cash? Maybe, maybe not. We'll wait and see. You'll notice that you're going to have to get a pretty good move to the downside here to get involved. The beauty of it is the risk isn't that much. I mean, realistically, you're talking about, what, 20 pips, something like that. So I wouldn't worry too much about that. As far as, you know, where do you expect the market to go from here? What you want to do is you want to see price really fill in to the bottom of that CPI range, which is very possible. Certainly is typically what happens on these days. But let's just wait. If price does move higher, you're going to want to get out of this thing, especially because you could be trend day up, and you don't want to get caught on the wrong end of that. As far as I'm concerned, this area right up in here, we were in severely overbought conditions on this CPI. What the heck's going on here? On this CPI right there. That's where your stop loss is going to be located. Remember, always shaded a few pips. Your top right up there is 134.94. We're at 96. I don't have a problem with that. And we're looking for that move maybe down to right around 134.44, somewhere in there, maybe 134.50. Not the worst trade in the world. We'll wait and see how that one sets up. Okay, we did have some questions on the Euro USD. Gold banging higher. Clearly, you want to get long gold really any way you can. It's just a challenge at these trade locations. It really is. Let's go back down to that 1 minute chart and take a look at the Euro USD. Euro USD, interesting type of a situation. Really the same trade as you had on your Great Britain pound USD. We're just going to wait and see how this moves, but it looks to me like the trend is going to be up with this CPI number. Dovish CPI, we're sort of going against the trend over there on the Great Britain pound USD. Let's wait and see exactly how it pans out. As far as your macro situation on your Euro USD, I always love to step back from 10,000 feet and see exactly what we're doing. This right here is sort of your weekly outlook. So you've got the big retracement level that we would love to buy down at 112.50, somewhere down in that zone. I'm really not too excited about waiting all month for that to come in, or maybe all quarter for that to come in. But realistically, we need to be looking at 2025's high, which is going to be established right there back in September, up there right around 119.19. So that 119 area is significant topside resistance for this market. I think we've got an opportunity potentially to get that as a sell, but it's probably not going to come for a while. So what do we want to do here? Well, if we're bearish or bullish, I mean, that's going to determine everything for me. The weekly gives you a pretty darn good level to be bidding. Spike low there. Spike high there. The bid came right off of 62%, which was fantastic work, right around 116.10-ish, and now we're bouncing higher. I expect this market to go sideways. Sort of a tough position that we're in, trying to pick a direction. I don't believe it's trending. This market's flat. The Euro USD typically is flat, and then that's one of those that you really got to be careful taking a position to the top or the bottom. As far as intraday scalping, knock yourself out. Feel free. I probably wouldn't be betting on a trend day, though. I don't see that developing right now. We've got a little bit of bullish action against the U.S. dollar, but I don't think it's going to be sustained. I really don't. We might trickle higher, we might not, but the Euro USD is still in negative territory for the day. So that CPI number did not shake the foundations of the Forex. It really didn't. All right, we've had a question for the US 100, the NASDAQ 100 for about 5 times. Essentially, this is sort of the analytics that I've been looking at for the past several weeks. This is a bullish pennant. No question about it. There's your bullish trend. Excuse me. Very dry here in Dillon, Montana. We're at about 5,300 feet above sea level, so it's just dust. So dry this time of year in January. Nice big run up. There's your compression. Monthly bullish pennant, maybe an ascending triangle. Essentially, you're looking for a breakout. You're looking for a big bullish break, probably above the all-time high at 26,250. Interesting stuff there. Key levels right around 25,000. I'd be looking at 25,000 for support. 13-week EMA, absolutely huge. 25,163. That's a big support zone. So if you're trading this US 100, you're looking at downside support, robust support right down at the bottom of your triangle. And essentially, you really are looking for that breakout above the all-time high. So what we have here is we have compression since October right in front of that all-time high. I'll be brutally honest with you. It's tough for me to really have anything but a bullish read on this market. It looks to me like we're getting ready to make another leg up. We're going to make another leg up more than likely in the US 30, the US 500, and the US 100. My best guess is it'll come as a product of dovish Fed policy, which today's CPI told us could be on the way, and then also really a halt to your geopolitical angst and your uncertainty globally. Monthly bullish pennant. That's not a monthly bullish pennant. It's a weekly bullish pennant, so we can get rid of that. But right there, that's sort of an ascending triangle. If you look at the monthly too, you can see the compression's been there for a long time. That's a monthly bullish pennant if I've ever seen one. So be very, very careful if you're shorting the US 100. It's okay to go short up here. What you don't want to do is you don't want to get on the wrong end of that breakout. You don't want that. All right, let me see. Ahmed, we might see 46.30 today, potentially in gold. I don't know that anything's going to stop gold to the top side. I really don't. What's going on with the yen? Yes, sir. Good question. Let's go ahead and take a look at the yen. Gold is trading strong. Ronana, gold's up big. We should have grabbed the Fibonacci retracement. Back to our Great Britain pound trade. Not bad. I mean, we're not getting killed here. We're sort of seeing the market turn in our direction. What I'm looking for is this thing to trickle down in here. I'm looking to trickle down into the bottom of that CPI number because I don't believe this is going to be the market mover that everybody thinks it is right now. We'll see how the day progresses, but this trade right here, we're not in a bad position at all. As far as gold goes, gold is absolutely banging higher. So what do you want to do? How do you want to trade it? I mean, for me, it's relatively straightforward. You want to see if you can bid really any retracement that you get, and you've got another one coming your way on the 5-minute chart. So a 5-minute Fibonacci would look something like that. 46.12 would be sort of the hot zone again. Let's go ahead and see if we can get a trade going on that. Great Britain Pound USD there. Let's go down to your gold, 46.16. Let's go to a 5-minute. You're starting to see this gold market top out a little bit. I am not interested in selling that at all. Even if we got a sell signal on that 5.813, I'm not interested. I want to buy. I want to be on the right side, which looks to me like that's going to be the long side. So right there, you're working from that spike low from about 20 minutes before your CPI, and then this is sort of your post-CPI range is what I would call that. Your pullback zone's right around 46.1283, so we could definitely throw down at about 46.13, somewhere right in here, maybe 46.13 and a quarter. Remember, you don't have to be incredibly exact on these gold scalps just because the spreads are so huge, especially if you're trading spot gold. So if you're looking at a spot gold right now, you got a 64 pip spread. I mean, that's absolutely huge. But the trade idea here would be relatively straightforward. You're looking to grab something right up in here, right up to 16.18. I mean, that's a rock solid trade. As far as your entry point's going to be, somewhere right around 46.13, and this area right down beneath 10 probably would be a pretty good stop out point. So yeah, maybe shoot for something right up in here, maybe right around 400. That's doable. I mean, that's very, very doable here on a pullback buy, and it lines up beautifully with your 5 EMA, which means less than nothing to me. But interesting stuff. Potentially a really nice pullback buy on gold. Once again, even though we are set up for a sell on the 5.813, I would be deferring to maybe a larger time frame if you're thinking about shorting, and I would definitely let this settle out between now and the U.S. Open. You don't want to get caught. You don't want to get caught on this one. You don't want to get caught short, especially if these things sort of blow down. You'll notice the dollar's just sort of on a fence right now. It's down, it's up, it's down, it's up. Traders really don't know what to do. Our Great Britain pound trade's back in the red. Interesting type of thing here that's developing. Is this developing into a trend day down for the USD? Man, the fundamentals say it should, but we just don't really know yet. We've got to wait. So right here, we're going to try to manage this trade. We're printing 46.16, 46.17. We've got an entry somewhere right around 43.18. That's not exact. You could go 46 and a quarter or 46.50 if you want. We're going to go ahead and play this one pretty tight. Let's go to a quarter, though. Let's take this up to, let's see. Yeah, somewhere right in there will work. Remember, it's a spatial game. You want to work with your eyes as much as you're working with your mentality, setting these prices exact. A lot of times, if we try to be too exact, we miss good trades. That's exactly what happened to us right off the bat today. Market's moving higher. Shouldn't surprise anybody. If we're fortunate enough to get a pullback, we got a pretty good chance of winning it. Let me see. Gold is strong. Let me see. Daniel, boring print. It's absolutely boring. We're going to go over the fundies here in just a second. Nothing until tomorrow's PPI. I don't even think PPI is going to do much. I really don't. Then also nothing in next week. USD strong. I'm betting against the USD pretty much most of this year. A lot of reasons for that. Everybody is now chasing the gold. Wait for the pullback. Yeah, you don't want to buy right now, Daniel. You want to wait. You want to wait for that pullback. You got to be smart because if you're buying right now, like if you bought up here, you got really hurt on that pullback. Remember, leveraged positions, it does not take much to really gut that trading account. So you definitely want to be careful with what you're doing. Don't just buy gold to buy gold because you're afraid of missing out. You don't want to go that route. Okay, here it comes. It's coming our way. Now, listen, I'm going to be fairly aggressive on this trade. The Great Britain pound trade we've got's right at about scratch. I do like that one, though, for the rest of the day. This one right here, we don't have a formal stop loss down. I'll be moving that during the trade. But realistically, what we're looking for is just a quick bounce. So right here, it looks like we're going to get involved. We're sitting there right around 46.13 and a quarter. What do I have, 39 down? That's fine. I mean, that's close enough. Bounce right off that 5 EMA. The real question is, do we get a chance? Now, I'm not going to be able to hold this position. I'm not going to be able to hold it very long at all. We're looking for a quick bounce, maybe back up to 17. We'll see how the trade progresses. Okay, we're going to be in here in just a second. Let's take this down to maybe a 1-minute chart. All right, we didn't get filled. That's trouble. We've been struggling getting filled here. This is the second time we've been flirting with this 38%. Okay, right now we're long. Now I'm watching this very closely. I don't want to take a big loss on this trade. If it happens and it sweeps against me, we'll do the best we can to get out. I know exactly mentally where my stop loss needs to be. It's going to be right down in here somewhere. But I want to watch how price action develops. Now we're sort of on, I would say we're on life support right here. We're getting a bit of a bounce, but we didn't see that big green bar immediately, which is exactly what I wanted to see. I wanted to see a lot of bidders in the market right from our 46.12 level, 46.13. So we're not out of this trade yet, but I'm not feeling very good about it at all. Okay, there's our bar. We want a nice big green bar here. If we don't get it, I'm going to become very skeptical of what price action's doing. Okay, there's the bidders. The bidders are there. They're digging in. They're putting up a fight. The real question is do we get that follow through up to that 46.17 level? Okay, now we're starting to see exactly what I want to see. Okay, now there's our break. Now that's what I'm talking about. Now let's get another big break. Let's get another big break and fill us up here at 46.17. Right now we're in the green. What do I do with my stop loss right now? Now if I'm hyper aggressive and I want to be very, very aggressive with my stop loss, I can put it right beneath that swing low on that green bar and almost take a rent-free trade, meaning it could almost be risk-free at this point. Now, 144, 155, we want to see this next bar really confirm our bullish bias. And of course, there's always pain involved in these trades. I don't care what anybody says. Now we have a decision to make. Do we move our stop loss from maybe down in here up into here and just make it a real tight scalp and just say, hey, listen, we didn't get the follow through. The trade wasn't what I thought. Or are we going to stay the course and bet that this 38% level holds up? We've got to make split-second decisions because, hey, listen, this is not easy. You're starting to see the market really get compressed right at our support zone. I'm losing confidence in this one. I'm losing confidence. We wanted to see two nice green bars, but we're not out of this trade by any stretch. There's no real reason to bail just yet. The bidders are there, but boy, let this be a lesson to you. Once the bidders aren't there, you've got to get out. Okay, right now I'm starting to think about making an exit. We're very, very tight. We're very, very tight with our stop losses. That's sort of what's going to preserve your profitability through the long run. We're still back. We're negative. We're positive. We're waiting for the big break. The market will break from this area. The question is does it break against us or with us? It looks to me like we're going to maybe break and take out this swing low. Right now, I'm starting to think about making an exit and cutting this thing off. All right, at most, we're going to lose 366, which isn't a ton, but we're watching this closely. I want to see how this 1 minute develops. Okay, if we get a hammer here, a little 1 minute hammer, then I'm probably going to hold it, but I'm going to move my stop loss. If we don't and we start breaking down in here, we're just going to cut it and we're going to walk. We're going to come back for the next trade, which is going to be right down here. Okay, right now I'm thinking about getting out. All right, right now we're going to want to give this just a few more seconds to rebound and form that hammer. It's still, I mean, there's your hammer formation. So we got to make sure that we know exactly what we're doing with the stop loss. We took some profits off a trade like this last week. We've got to be very, very in tune with where we need to get out at. Right now, I mean, this thing's on life support, but that's the hammer I'm talking about. If that hammer sets up, we've got an incredible opportunity here potentially to build this towards a winning trade. Right now, it does not look good, but that hammer, if it sets up, okay, there's our hammer. My stop loss immediately, we're going beneath the hammer right there, and then I'm out. Okay, if we get swept out, I'm out. I don't care. The stop loss is down. If we get locked out, we're out. We still got a pretty good trade here at a 1-to-1. Okay, we got stopped out. Now, what does that tell us about price action? It tells us a couple of things. Number one, our Fibonacci was valiant. It just didn't quite work, did it? Nice bullish candle there. We didn't quite get the follow through that we got a little bit earlier. There's a lot of reasons for that. Most likely volume. But this compression right here and then this break, now we're coming off. You don't want to be long right now. You don't want to be long. The trend is changing. So if you step back to that 5-minute chart that we're talking about, there it is. Do I want to go in right here at 406? I'm not interested. What's happening now? You're starting to see price fill in where? To the bottom of that CPI range. So you got to be very careful here. We had an opportunity to take some money off of that one, about what, $150, $200. It wasn't what we were looking for. Over time, taking those tight profits will cost you a lot of money. You won't be profitable. Cutting off winning trades. We needed to get at least a bounce of about $300 or $400, which only was like a $3 bounce. In this gold market, that's nothing. But you'll notice that our stop losses are no joke. We know when to get out. If you held this one, you took even more of a hit. Now you're back down to that 62%. Nice bounce off of 62%. The question is that the absolute bottom of this pullback? This is a textbook squeezing retail longs out of the market. That's exactly what's happening here. A little bit of selling entering. It's really squeezing you out, and that's a tough proposition. Really is tough. So we took a loss there. I'm not real happy with it, but, it is what it is. You could have easily stepped up at 62% and bought that one. For the sake of this demonstration, I was like, there's no reason really to do it because I'm not really sure that we're going to get that strong trend that we thought. I think the dollar is going to be topsy-turvy the rest of the day. I would probably be waiting for that U.S. Open, especially to get live on this gold. I would be waiting. Now, as far as our 5813 goes, you do have a sell signal right there, so you could be trading that with a stop loss up above the high. I'm not really interested in holding shorts here. Look at 62%, putting up a good fight. But once that level's gone, look out. You're going to trade down to the bottom of the CPI range. That's scalping. That's high-impact scalping. We got hit. We took a loss. That's the way it is. Great Britain Pound USD, we're a little bit behind here. Not really a whole heck of a lot going on, though. We'll wait and see how the U.S. Open treats it. This would be a trade you probably would be holding, if you don't get stopped out. This would be a trade you'd be holding until probably the end of the London trading day. That's what I would say, probably the end of the London. So the U.S.-London overlap is when you want to be trading this. And other than that, you're probably just along for the ride. But as long as you have your risk and your reward down, you're in pretty good shape. Position sizing 1% to 3% on any given trade. That's the name of the game. 266, that's not a very big account at all to trade 1% or 3% using that size. So something to think about there if you are in there and scalping this. Remember, these news events are incredibly difficult to trade. We're pretty good at scalping on the Fibonacci's. Sometimes our moving averages really get convoluted, especially as we're going into the U.S. session. Okay, we've got a lot of comments there. I'm way behind on because I wanted to really get into the mindset of trading this thing. We're also going to cover our fundamentals, and then that'll be a wrap for today. All right, let's see. We've got a lot of comments here. Daniel, I personally think the USD is still the cleanest shirt in the laundry. Great Britain pound and euro are messed up badly, not showing yet, though. Well, that's the idea that the US dollar is always sort of a safe haven. The idea that, okay, it's a safe haven. It's the rat, it's the ship with the least amount of rats. And I believe that to a certain degree. But when we're talking about global economic policy and the change at the Fed, I think the change at the Fed's going to be a real game changer. That's redundant, but it really is going to be a changer because you're going to see dovish policy a la Bank of Japan 2002 to 2010 or 2015. In my view, and nobody's said it yet, and I'm not really criticizing the administration or saying anything really, but it looks to me like the idea here is to cut interest rates as low as you can, try to grow the economy that way. That way everybody's making more money and the inflation doesn't seem as bad. Because the truth is, watch YouTube, watch some of these videos. I saw a video from a young man went to Costco. It was $70 for 3 steaks. That can't work. The only way that can work is if you're making a lot more money and all of a sudden $70 doesn't mean anything. It's something that I believe for a long time that the United States would eventually try to inflate its way out of debt. And I think the Trump administration is on board with that. I think they're fine with it. They're fine with inflation pretty much staying where it's at. As long as the economy is growing at a bigger rate, you could say, well, that $31 trillion debt that the United States has, which is a staggering amount, is nothing in compared to this new GDP, these huge GDP numbers. In my view, that's the way that we're going to go here. And what that's all predicated upon, it's predicated upon a new era in the U.S. dollar, which means that maybe we're not talking about the DXY being around 98 or 100. Maybe we're talking about the DXY being around 80. Maybe we're talking about 85 being the long-term level. Take a look at the dollar index. I believe that, I had a great trader one time a while back, and he just told me just a little anecdote. He said, listen, Shane, because I cover the fundamentals a lot, and he says, I don't need to know the fundamentals. It all shows up in the price chart. And I'd say, well, there's something to be said for that. For me, I like to focus on the macro trends and things because I believe there's value there. But you can see exactly when Trump was inaugurated in January of 2025, the economists, the powers that be knew what the new game plan was. And that was to devalue the U.S. dollar. There's no question about it. Now, it's not necessarily that a devalued dollar is a bad thing. What it's going to do, though, it's really going to hurt savers. It's going to hurt folks that have had the money under their pillow or in the bank it's going to hurt them. And I'm one of them. To be honest with you, a good portion of my holdings are kept in cash typically. And the reason why is I like to be liquid. If we see opportunities, we can jump on them. But make no mistake about it. When you have a lot of money in the system, your interest rates are low. You're not going to get paid anything for your deposit at the bank. Your CDs, you're not going to get paid anything for. And essentially, you're going to have to be forced into more higher risk investments. In my view, all of that makes the markets go up. It makes the dollar go down. It's just the way that it is. So I think that the USD is really going to fade. Yeah, eyes, US 30 is a buy. I tend to agree with you until we get to that 50,000 level in the US 30. I mean, this was sort of our bread and butter. We put this one out on our switch picks of the week, our hot picks, 50,000. I love simple. Right now we're printing about 49,560. I think that you're definitely, you could probably ride this long until you get back up into that 50 range for sure. Absolutely, for sure. Let's see. Turkey and Harga. I don't know what that means, Yogi, but thank you. Welcome. Let me see. Eli, 512 Eli. Gold is good. Sometimes we're just too early. Well, I mean, that's just, yeah. But we have to big picture. There was a reason why I cut that trade off so fast. And the reason why was we could easily chop down to 46 even, and there's no way I'm going for that ride. We understand that we were buying very near all-time highs after a news event. It doesn't get much riskier than that, but the trade was still good for like $200 until we pulled it off $175. So you could have easily taken some profits there, just played it tighter. I was looking for that next gold bar up or the green bar up, and probably should have got it, but that's all right. We don't worry about the ones. We worry about the execution. I still think the stop out was pretty good. We're watching gold rebound back up to our entry point essentially. So maybe that 62% buy was better. Had it been, scalping aggressively, then the money would have went down on 62 as well, and you'd have made it back and then some. But we don't worry about that. We don't worry about the ones we don't take. We just try to do the best we can with the ones that we take. Let me see, young Rich Minds. My trade on gold buy just went live now, targeting the previous day's high. All right, young Rich, best of luck to you. You got about 46.11, 46.12 right here printing gold, so there's nothing wrong with that. Best of luck. Gold pull back to 45.48. Yeah, Tina, I would be there with bells on. 45.48, 48.50, or excuse me, 45.50, maybe 45.45 was the key level, maybe 45.47.50 or 45.48. I think that's going to be really tough to beat. I do expect a pullback. I mean, remember, retail traders typically get destroyed. Those pullbacks can be a big deal. So be careful, be careful, be careful, be careful. So yeah, it's a good level, Tina. 45.48, I agree. I thought for sure the CPI would return the Euro USD to the bullish trend it was in December, but no indication of that for now. No, there's not. I mean, what you're doing is you're seeing the Euro USD ticking higher moderately. Great Britain Pound USD is right around our break-even point on that trade. The dollar's not doing much of anything right now. Not doing anything. Interesting stuff. The CPI number didn't do anything. At least not yet. U.S. Open in T-minus 25 minutes. We may get a bigger move there. Let me see. Let me see, Daniel. Yeah, if you have to make a quick hop to Mexico, you want to be liquid. I don't know that anybody's making quick hops to Mexico anymore with their money. It's pretty dangerous down there. I haven't been to Mexico in years, but used to go all the time. No, I don't make quick hops anywhere. I typically lock down and stay where I'm at. Stability. Stability is the key. Simplicity and stability. Let me see, Eli. I've noticed waiting on new candles to form helps, especially on the 4 hour to 1 hour. Well, I mean, that was sort of the story I told the other day. It's like if I know how the next candle is going to form, boy, I have an incredible leg up on the competition. Gold on the rally. Did we bail too early? We might have. Look at that, 62%. Beautiful, beautiful stuff. Remember, these are all based on that 5-minute chart. 5-minute, let's sort of your pre-CPI, bang, bang. 62 is the winner. The uptrend is still technically intact. Typically, if you trade 38s and 62s, you're in pretty good shape. This right here, though, this was our trade that we executed. Right there. Really a beautiful bounce. I mean, this right here had a high probability of hitting. What was our high there? 46.15.37. Our entry was down right around 46.13. So we did get about a $2 rally out of it. Pretty good trade. I mean, we could have taken the money off the board. I wanted to let it lie, really show you guys some trade management. We cut it off right there, which turned out to be a pretty good move, and then maybe a re-entry down in there wouldn't have been bad. Do you want to be holding longs or shorts right now? You want to be holding longs. Retail got smashed right here. Retail longs got smashed. Now you're compressed, and now you're rocking and rolling. Free path towards the top. More than likely, the long's going to cash in big today. We'll wait and see exactly how it develops. Great Britain Pound USD, I mean, this is just our pet rock. Nothing's happening. You could leave it. I would leave it probably for a few hours and see how it develops. But realistically, this was our trade back in here, and nothing's really happened just yet. Don't know which way it's going to go. Interesting, sort of dead center of that CPI range. Welcome to scalping Forex, right? Very, very, very difficult market if you don't have patience. You got to have patience. Probably just day trading and swing trading is the best way to hit the Forex. But if you're a scalper, that's great. Just make it work. Figure out a way to make it work. All right, everybody, let's go ahead and take a look at these fundamentals. U.S. Consumer Price Index. Here is the official release over at BLS.gov. Consumer Price Index, December 2025. All consumer, the CPI for all urban consumers increased 0.3% on a seasonally adjusted basis in December. The U.S. Bureau, over the past 12 months, all index items increased 2.7% before the seasonal adjustment. Index for shelter rose. Yeah, I mean, rents and housing prices are incredible here. So you definitely saw, where's the biggest changes here? We're not going to go over that. It's too much right now. Let me see. All items index rose 2.7% for 12 months. The same increase is over the 12 months ending in November. All items less food and energy, that's core, rose 2.6% over the last 12. The energy index increased 2.3% for the 12 months ending in December. Food index increased 3.1% year over year. So, I mean, you sort of had a dovish print here. You had a real dovish print with regards to our expectations. Remember our expectations here, 0.3, 0.7. I mean, you actually saw this one come down a little bit, 2.6. So not bad stuff. It was a dovish read. No question about it. Should be bullish for stocks. Should be dovish for the USD, but we're not seeing that reaction right now. So be very careful with what you're doing. Be very careful. Let's see. We've got a couple other questions here, and then we're going to go ahead and stick a pin in it. Gold rallying 46.15. Silver's the big story, up another 3.25%, flirting with $88. Unbelievable rally. Really unbelievable in silver. Unreal. Let me see. I've noticed waiting on new candles to form helps. Absolutely, Eli. Stephen, what is the Supreme Court decision comes tomorrow or this week? How does that impact the Euro USD? Okay, so the big thing was on tariffs. The Supreme Court decision on tariffs was supposed to come down last Friday, and what the Supreme Court did was they refused to rule on the case. They delayed it. They said not for now. So I wouldn't necessarily bet the ranch that you're going to get a decision out of the Supreme Court on tariffs right now. I don't think that that's going to be the case. I think I would look for them to kick this can down the road until after the new Fed chair sits. But if you do get a decision out of the Supreme Court for or against tariffs, I think that the big thing you got to remember is that against tariffs is really going to shake things up because it's going to probably send stocks higher. What is it going to do to the dollar, though? Probably going to send the dollar a little bit lower. The idea being that without those tariffs, business is going to pick up, and the impetus will be to cut interest rates to sort of preserve that market share that the U.S. dollar currently has. So I would be looking at something like a Supreme Court taking tariffs off the board to be dovish. And this is huge. I mean, this is hypothetical. We're deep into the hypotheticals here. But I think that you'll see the dollar fade a little bit. And the reason why is the idea is that the economy is going to just have this big growth spurt once the tariffs come off. And that probably will lead to maybe, I mean, you could say that you're going to tighten the U.S. dollar, but that's not going to be where the impetus from the administration is going to be. They're going to want to cut no matter what. So I still say that it's dovish. Now, if the Supreme Court comes in and upholds the tariffs, I think it's just business as usual. The markets have already priced the tariffs in. So I do believe that that's not going to be much of a change with regard to our market structure. Short-term volatility, absolutely. So like for the Euro USD, I'm still sort of bullish the Euro USD. I think the dollar is going to fade, but we have to wait and see some evidence of that before we jump in with both feet. 119 to the top of the Euro USD is a big level. Keep an eye on that one. And then after that, 120. And we'll talk about how to trade it really every step of the way. A lot of good stuff there. All right, everybody, one last check, and then we're going to go ahead and call it a day. You'll see the FedWatch, CME FedWatch Index. Next 15 days, we'll have FOMC live for you in about 2 weeks out. Jay Powell is on the hot seat. And right there, you have a 95% chance of rates staying exactly where they're at that January meeting. Absolutely interesting. Let's go ahead and hit refresh. See if we can get maybe a little bit newer number, 95%. So we're waiting for the Fed. We believe that now after Jay Powell has been sort of put on the hot seat and under investigation, that you're going to see probably no rate cuts out of Jay. That's what I would say. So where does this thing end by the end of the year? And this is something we're going to reference the whole year because I find it the most interesting. This is sort of your bell curve, but notice that it's shifting more to the hawkish side. Only a prime rate really of 3 to 3.25. That's only 2 quarter-point rate cuts for this year. I think you're going to land more over in here. I see it being about 2.25 to 2.5, somewhere right in that zone, and that all is predicated. That idea is based on a new Fed with a new Fed chief. Definitely. Remember, if you want to trade any of this action, check out Switch. Thousands of markets, $0 commissions. You've got all sorts of things, 1 to 1,000 leverage, all sorts of bonuses. It's easy to get started. Check out the reviews on Trustpilot for a 4.7 out of 5. Not too shabby. So pretty good place to be trading in 2026 if you're interested in getting into the markets. All right, everybody, that's it for now. Thank you for joining me for CPI. Be sure to check out our Switch On hot picks for this week. That's over on the Switch Markets YouTube channel. Also, we've got our daily live streams. We've got a live trading webinar on how to trade the opening range breakout strategy. That's going to be on Thursday, and then we're going to be live at 1 p.m. Eastern for the rest of the week. Also, be on the lookout for some breaking news. If we do see breaking news, I'll jump online, and we'll cover them really quick. I think that we're going to have an opportunity to trade the news this week. This is pretty much PPI tomorrow. We're not going to cover it live. I don't believe it's going to do much to the markets. It may, but I highly doubt it. I think that we're in a position here to trade the rest of the week with a lot of confidence. Our ranges are setting up 50,000. The US 30 looks pretty good. I think that the US oil market looks to be topping out to me right now. The US 500 right up around 7,000. Gold pushing all-time highs. Silver pushing all-time highs. Really a lot going on in these markets. Right now, the dollar's sort of flopping around like a dead fish, though it's not doing much of anything. Our Great Britain pound trade is right at break even. We're down about 2 pips, so I wouldn't stress about that one. We'll wait and see how it pans out. I don't think you're going to get much of a move at all. If we do, we'll have to figure out how to manage it. All right, everybody. Have a fantastic trading session. If you have any questions at all, head on over to howtotrade.com. Register for a free account. Send me a private message. I'll get back to you in short order. And as always, if you have questions or comments, you can always leave them beneath this video when it's posted to YouTube. All right, everybody. That's a wrap. Have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.